Hey guys, what is up? It's your boy Vijalarazzi, and today we are going to be learning how to trade using Fibonacci. Now, the Fibonacci extension tool is really great for some of these new guys that are looking to accumulate at cheaper prices, as well as get some targets on when to exit the market. I know that these were two of the hardest things that I had to deal with when learning how to trade, so I'm hoping by the end of this video I give you guys a little bit better of an explanation on how to do so. So, what is Fibonacci? The Fibonacci sequence is a series of numbers where a number is found by adding up the two numbers before it. So this means 0 plus 1 is 1, 1 plus 1 is 2, 1 plus 2 is 3, 2 plus 3 is 5, 5 plus 3 is 8, 8 plus 5 is 13, and so on and so forth. The Fibonacci sequence was first created by Leonardo of Pisa. He was actually researching to find out how many offspring could come from one rabbit in a given year. Keep in mind there were a few variables that came into play, but he came to the conclusion that 233 rabbits could be produced by one singular parent. When he broke this down, it actually created this exact mathematic formula called the Fibonacci sequence. Why is Fibonacci important? It's the fractal of life. It can be found everywhere, even in financial markets. Oddly enough, you wouldn't expect to find that this pattern used to determine how many rabbits could be produced from one singular parent is also found all across all walks of life. The galaxies in space, whether it's in this little rose bush or even on the thumbprint of your finger, the Fibonacci sequence is found literally everywhere. I know that you guys have seen this spiral. I mean, it's one of the first patterns that I remember recognizing as a child. So it's just crazy that this pattern can also be applied back into financial markets and used to trade markets profitably. It still blows my mind, and that's actually why it's one of my favorite things to use. Not really for the importance of it in trading, but because of the fact that this is just this universal mathematical code that applies through all walks of life, even financial markets. And here's some examples of the Fibonacci extension tool. You can see that price reacts to these little horizontal support and resistance zones of the Fibonacci sequence quite well, actually. You can buy at low points, or it gives you good exit points. You can see that the market reacts very well to this zone. But we're going to cover this a little bit more when I transition to my screen, so let's get right into this. Now, a couple things to note. It's extremely important to understand how to draw your fibs properly. When you're drawing your Fibonacci extension tool, you want to be going from two areas of extreme to the next. So you're going to go from the point in which the move starts, or this low, to the high of the move where it ends, about right there. Keep in mind, you can include candle wicks if you're looking to draw it like that. But for me personally, I like to just include the candle bodies because I feel like it's a little bit more accurate. And then you slide it all the way across. Now, this is going to give you your Fibonacci extension levels. There's a few numbers that I want you guys to watch out for because they are the most key when it comes to trading with the Fibonacci extension tool. The 786, the 88.3%, and the 618%. Now, why are these numbers important? Well, to start, the 618% is also the golden ratio. And what that means is if you had the picture of the spiraling Fibonacci sequence, as the numbers got exponentially bigger, the numbers would actually get closer to equaling 61.8% Fibonacci. And eventually, once you get to, I think the number's 233, that actually equals the 618% Fibonacci, or the golden ratio. Oddly enough, that's the exact same amount of numbers that one rabbit could produce in a year. So that's actually how the Fibonacci sequence came to be about. And the 618% Fibonacci is actually the one number where all of these in the middle are divisible by it. So as this Fibonacci sequence fractals and gets bigger and bigger and exponentially expands, it actually gets closer to equaling the golden ratio of 61.8%. That's why the 61% fib is so important. When it comes to entering a market and you're looking for a zone to target, the 786 and the 88.3% are my favorite due to the fact that crypto retraces very, very deep in its market cycle. When it comes to targeting these, the 786 and the 88.3% are often the two targets where price stops retracing and starts to move back onto the upside. But the 786 is a great target because a lot of the times there's extreme amounts of value on the 786 Fibonacci level, and a lot of the times the market will get a bounce off of that level as well as completely reverse and go back on the upside after hitting the 786. Now, like I said, not all markets behave this perfectly, and something to watch out for is sometimes coins will bleed just a little bit further. Sometimes coins have to have a little bit more of a shakeout to get all of the bag holders out of the market so new money can come in and start accumulating at those cheaper prices. So that's why the 88.3% Fibonacci level is so key. A lot of the times if you start accumulating in here, now whenever I'm buying and I'm accumulating based off of Fibonacci, I'm not buying all at one time. I'm taking small bids and I'm placing them at this level, so every time price comes down and touches that, I'm getting filled in a little bit by a little bit and I'm slowly accumulating. If you take and you buy all of your position at one spot and then the market decides to go lower, then you're going to be screwed and you're going to be holding a way bigger loss than you need to. If you would have just been slowly accumulating and exercising good patience, then you would be well better off for the bull rally to follow. So that's why I use this 88.3%. If the 786 fails and prices need to retrace just a little bit lower, I've got a backup plan in place and I'm looking to accumulate as price ventures lower and lower. I found that a lot of the times after a reversal, the coins will actually bottom at the 786 and the 88.3%, and then they'll go on the upside. Stellar Lumens here is a perfect example of that. We had a strong bounce on the 786. As you can see, price consolidated here for a while, which showed that there was lots of value in that area. It was able to keep the price floating for a while. However, eventually the sellers became too great, and then we had to have a further shakeout and retest of lower support levels. That is why the 88.3% was so key. You would have got a perfect little buy entry filled there if you would have just held to your trading plan and waited and had patience. When you're scaling out of a market, meaning you've already accumulated all of your coins, you're waiting for the rally to follow where you can start selling into all of that buy pressure. You're going to go from the high of the move, it's just going to be flip-flopped. You're going to do the opposite of what I just showed you. You're going to go from the high of the move to the low of the move, because the cool thing about Fibonacci is the math is the same. Whether you're going from the low to the high and searching for buy opportunities, or whether you're going from the high to the low and searching for scaling out opportunities, the math stays the same. If you look at my fib tool, you can see that my extensions are 1618, 2618, 3618, 4618, and then 5618. Now you may be asking, why are you using the 618? What about all of the other little fib levels in between? The reason why I use only the 618 is because the 618% Fibonacci is all of these other fib zones simplified into one number. Remember, I told you that as the Fibonacci sequence expands, that number actually gets closer to equaling the 618% or the golden ratio. Really, the golden ratio is just all of these numbers of the Fibonacci sequence simplified into one number. Instead of me needing to put all of these different little zones up here and trying to target all of those, I just choose to target one number and stick with that. And that one number can also be infinitely fractaled out by just adding a 1 over its place. If you're wondering how to do that, just click on your fib extension tool, and there's going to be a bunch of different boxes that are unchecked. If you go through here and just type in 1618 or 1618, 2618, 3618, 4618, etc., and then you click the check mark box, that's actually going to put them into your fib extension. And that's how I fractal out my targets. So you go from the low to, or the high to the low of the move, and then you're looking to target the golden ratio at the 618%. So this would have gave us all of our levels in which we were going to target if we would have been accumulating in this low, and we would have looked to been scaling out of our position as price then began to rally back on the upside. We can see that even though price went well beyond all of these initial targets, just by placing these targets in these areas, this gives you a trading plan to follow where you're going to exit the market. You always want to have a plan on when or where you're going to exit the market. Fib tools are just a perfect little indicator to use. Not everybody's going to be able to accurately predict the top of the market, which is why we just pick zones and then we stick to that plan and you take those profits. If you're not taking profits, you're going to be missing out far greater than if you were to just take those profits. Don't give in to your greed. Always remember to scale out and have a plan and stick to that however you're going to scale out. I personally, when it comes to scaling out of these positions, I like to use these fib extensions because it just gives me an area and I can just set a stop loss and forget about it. And then as price rallies, it's automatically taking those profits for me. Guaranteeing and locking away those profits is so key to becoming a profitable trader. People don't understand that that's one of the biggest difficulties, is just managing risk to reward and taking your damn profits when you need to. I can't even tell you how many times I struggled with that. How many times I've gotten wrecked by just not taking profits when I needed to. So that's why these fib extensions can be really helpful, is just because they give you a zone to target, and whenever that price hits that point, you're sold and you're out of the market. If prices still keep rallying up, it doesn't matter. You can't win every single trade and you can't get every single trade exactly how you wanted it to go. And if you can take profits and stick to that zone in which you're taking profits from, you're going to be a more consistent trader, and consistency is key when it comes to stacking your Bitcoin and creating steady gains overall. If you want to grow your wealth, you want to be a consistent trader. This was my lesson today on Fibonacci extension tools. I just really wanted to give a little bit of an introduction for some of these new guys. I didn't go too far into detail on how to use these fibs. I didn't come up with any great strategies. I just used very, very simple, basic techniques that I used when I first got into trading that you guys can use to help further your profitability as a trader. I really enjoyed using fibs when I first got into trading because of the fact that they were very, very simple to use. By doing a little bit of back testing and learning how these fibs work, you're going to be able to learn how to take profits a little bit better, as well as accumulate when prices go low. So the Fibonacci is just the best of both worlds. It helps you to get targets, it helps you to find entries, and so that's really why I wanted to help you guys with this video today. It's because I found that it's one of the better and easier indicators to use for beginner traders. If you liked this video, always remember to leave a like, comment, and subscribe to my channel. I will be posting more updates in the future, so stay tuned for that. I'll catch you guys in the next one. Peace.